Hello and welcome to the day ahead. It is Wednesday, April 27th. I'm Andrew Gagan. Well, a bloodbath on Wall Street overnight as tech led the drag, taking the Nasdaq to its lowest close since 2020, with the index posting its steepest one-day percentage drop since September 2008. The Dow slumping nearly 800 points as investors brace for a series of mega-cap tech earnings and an all but certain 50 basis point rate hike from the US Federal Reserve next week. Investors are also waiting on financial results this week from Amazon, Capital One, Facebook parent Meta, and Twitter. Stock specifically, Twitter shares giving back some of its takeover gains, while Tesla was pummeled on fears chief executive Elon Musk may sell some of his stake in the company. Microsoft and Google parent Alphabet both fell more than 3% after earnings showed a beat and a miss respectively on first quarter earnings released after the bell. Globally, world and European markets both gave up early gains as China battles to combat rising COVID cases in Beijing. China's blue chip index taking another hit after posting its worst day in 2 years on Monday. This despite the PBOC vowing to step up prudent monetary policy support.
Zero COVID policy, we look at it and say it doesn't make any sense, but from a China perspective, they might not have a choice. So they have to do this to save lives. It's going to damage the economy, but it's hopefully something that they can test and trace and track and isolate and all that sort of stuff, which is what we've been doing for the last 2 years, and get on top of this thing, and then they'll have to pick up the pieces from the economy. So I think they can do all the reserve ratio cuts and all the stimulatory programs they want right now. It's not going to make any difference. It's what happens on the other side of this. Now, I think this is an episode, so I think that this is something that the Chinese people will get through. And they'll get it under control, because we've seen successfully that's been done before, and then the damage from the economy will be what the people focus on next.
Well, let's take a look at the bigger picture. US long-term treasury yields falling, with investors worried that China could expand its COVID lockdowns, dragging on global growth. The US 10 yields falling 9 points to 2.74, and the 2-year falling 14 points to near 2.5%. In currencies, the US dollar index up more than 0.5% on the day to its highest level since the outbreak of the pandemic in March 2020. The Aussie falling to a 2-month low at 71.2, while the Japanese yen recovered ahead of the Bank of Japan meeting tomorrow. In economic data, US durable goods orders in March were slightly below estimates, while new home sales remained high at an annualised 763,000, with supply chain constraints leading to construction delays, and the Richmond Fed manufacturing survey stronger than expected, although the report cited increased pessimism over the next 6 months. Let's bring it back home. The steep sell-off is expected to continue when trading begins locally this morning. SPI futures down close to 1.5%. Oil prices rebounded overnight on moves by China's central bank to support the economy with accommodating monetary policy. Brent crude rising more than 2.5% to $105 a barrel. Similarly, iron ore rising 2.5% to $139 a tonne. And the gold futures price up 0.4% to $1,904 an ounce. And there's focus on the gas market this week as Russia cuts supplies to Poland and Bulgaria as the standoff between Moscow and Europe escalates. Russia is threatening to halt gas supplies to countries that refuse to pay in Russian rubles. And the sharp sell-off in risk assets has hit cryptocurrencies, Bitcoin tumbling around 5%, Ethereum and altcoins following suit. Well, today we'll get a good look at what the Reserve Bank will have to consider when CPI numbers are released. Rising food and fuel prices expected to contribute strongly to inflation, along with house prices. The median forecast is for headline CPI to lift 1.7% for the quarter, taking the annual rate to 4.6%. That would be the biggest annual increase since September 2008, which immediately preceded the peak of the global financial crisis. Elsewhere, China industrial profits are expected to have been hit by COVID lockdowns in March. And that is your day ahead. See you again tomorrow.